So we're ready to move on to our next example here in our lesson. And we're just going to sort of dive in and start walking through each of these individual transactions and analyzing them in accordance with our accounting equation. You'll remember from the previous lesson, right? We sort of set this up that we're going to ask ourselves three questions. We're going to ask ourselves, one, what's being exchanged here, right? What are the account names that we need to use in order to sort of begin the process of analyzing the transactions? What are the account names? Two, for each individual account that we identify, right, where does it fit in the accounting equation? Is it an asset, a liability, or one of those components of equity? And then finally, question number three, is it increasing or is it decreasing, right? As a result of this transaction, does the business have more of that thing that we identified, or do they have less of that thing? So we're going to start here with Hiram Landscaping. Hiram Landscaping is the company that we are accounting for. And Hiram Landscaping began operations in April 2022. And so we're just going to go one by one through each of these transactions. What you will see is that the transactions carry over. There's this slide and then slide number 5. And the highlighted red transactions, we're going to get to that later. So we're not going to worry about why they're highlighted in red right now. We're going to get to that after we've worked through each one of these transactions for the month of April. So I'll explain in the next video sort of why those are highlighted in red. Okay, so the company received our first transaction on April 1st. The company, Hiram Landscaping, received $95,000 in cash and $22,800 in office equipment from a group of investors in exchange for ownership or common stock. So what we have to identify here on April 1st is what is being exchanged, right? What is the company receiving and what did the company give in exchange for whatever those items were? So in this example, we actually received two things. We received cash of $95,000 and we received office equipment of $22,800. And in exchange, what we gave those investors is ownership. And we know from the previous lesson that the way that we designate ownership in our accounting records is through common stock. Common stock represents investors' ownership in the business. So over in my Excel template, I am going to, on April 1st, include cash, office equipment, and common stock. Okay, so again, for each individual account, the next step that we have to take is to identify where does it fit in the accounting equation. So with cash, we have to understand, is it an asset, a liability, or one of the components of equity? And we know again from the previous lesson that cash is always an asset. Cash is our number one asset, right? And so then the third question, is it increasing or decreasing? Because Hiram Landscaping received cash, that means cash is increasing. It's going to be a positive $95,000 in our accounting equation. Office equipment. Is it an asset, a liability, or one of the components of equity, right? Well, if you remember, right, assets are anything that we own and can benefit from having. Liabilities are something that we owe, right? So we receive something and we have to pay for it later. And then with equity, we have common stock that's designated as sort of ownership of our organization. Revenue is when we provide services to a customer or a client. Expenses is anything that we incur over the period of time in order to help us generate revenue for our business. And then dividends are those profits that we distribute back out to our investors as sort of a thank you, right? We want to reward them with some of the profits that the business has earned. So again, we have to identify, where does office equipment fit? Well, office equipment is something that we would own and benefit from having. So office equipment is going to be an asset. And then question number 3, is it increasing? Do we have more of it now or do we have less of it now? So because we just received this office equipment, it's going to be an increase, a positive amount, $22,800. And then finally, common stock. Common stock, is it asset, liability, or equity, right? We know that amounts invested by owners has its own category, right? Here under our equity section, common stock has its own column. So we're going to go ahead and put common stock in that column, column H. And we have to identify, is it increasing or decreasing? Is there more common stock now in the investor's hands or is there less? And so we know that because we made this exchange, and common stock always, when we make this kind of exchange, common stock always has a positive impact to our equity, that's going to be a positive amount. Now, it didn't specifically tell us in the problem, if we look back at the PowerPoint, it didn't specifically tell us in the problem how much the common stock was worth, but we can figure it out, right? If the common stock is worth an even exchange, then what we would do is take the cash that we received, the 95,000, and add that to the office equipment that we received. So I'm just using Excel, a simple formula in Excel, where I take the 95,000 and I add it to the 22,800, and that gives me common stock, $117,800. So here we see an example that we didn't have previously. We see here in this example that we actually have 3 accounts that were affected by this transaction: cash, office equipment, and common stock. So what we learned in the previous lesson is that there's always going to be at least 2. This is double entry accounting. That means that we have 2 accounts that are always affected by a financial transaction, but it can be more than 2. It's always 2 or more, right? And so in this example, we see that there were 3 accounts that were affected. So there we go. And again, if we weren't necessarily as comfortable with the account names, you could go ahead over to the other tab and see what are some of the account names that we've used so far. We've already used cash and common stock. One of the ones that we didn't use, though, is equipment, right? A long-term asset that's used to help us provide services to our customers. So that's what we just identified. And we were specific about it. This was office equipment, not just any general equipment. It was office equipment. So there we go. We identified our first business transaction for the month of April. Now, April 2nd, the company paid $7,200 cash for 12 months of rent for their new office space. So what this transaction is showing us is that we are essentially paying for future rent, right? It's not rent that we've already incurred. It's for future rent. 12 months of rent is being paid for here on April 2nd. And so this is not something that we've identified before in the previous lesson. So we can go ahead over to our accounts and think about what account name would make the most sense for us to use, right? So utilizing the definitions that I've provided, right? First of all, we know that one of the things that's being exchanged is cash. We paid cash of $7,200 that was given to us in the problem. Okay. So what we don't know, though, is the second account name that we need to use. So if I scroll through my definitions, rent that is paid in advance of using the facilities. That's exactly what just happened, right? We paid right now on April 2nd, and we're going to rent the facilities for the next 12 months. So rent that is paid in advance of using the facilities, the account name that we're going to use is prepaid rent. So in my accounting equation template, I'm going to include cash and prepaid rent as my 2 account names. Cash, we know, is an asset. And because we are paying cash, we're going to see a negative $7,200. So negative $7,200 of rent, of cash. And then prepaid rent. Again, if I use my accounts defined tab, prepaid rent is an asset, but let's understand why it's an asset, right? It's good to have this as a resource and to utilize it, but we have to understand why it's an asset. Prepaid rent is an asset because it is something that we own and will benefit from having in the future, right? We just made an annual payment, $7,200, so that we could use this office space to help run our business for the next 12 months, right? So we have paid for it, and we're going to benefit for the next 12 months. That's why prepaid rent is an asset. So over under the asset column, do I have more prepaid rent now, or do I have less prepaid rent now, right? Obviously we have more, right? Because we just made the payment just now. So cash is decreasing, but our prepaid rent is a positive amount. So you see here, if I scroll down to the bottom, right, I still have that accounting equation, assets equals liabilities plus equity, just like we did in the previous lesson. Every time we make a entry into our template here, it's going to update at the bottom for the total assets. Here's the sum of all of the assets, the total liabilities, right? And you can just double click on that to see what the formula is. And then the sum of all of the equity accounts. If I take all of my assets and I compare them to my liabilities plus my equity accounts, right, I can see whether my accounting equation holds true or not. And in this case, it does. So there we go, cash and prepaid rent. We're ready to move on to April 3rd. On April 3rd, the company purchased landscaping equipment for $11,400 and supplies for $2,280, all on credit with payment due in 10 days. So we have to identify, again, what is being exchanged here. Well, we got landscaping equipment and supplies, right? Those are the things that we received. But then it says all were on credit. We received those items on credit, and the payment is not due right now. It's due in 10 days. So first of all, we know that landscaping equipment and supplies, landscaping equipment and supplies are going to be two of our accounts. But then we have to think about that payment due in 10 days, right? And we did go through one like this in the previous example, but you may not remember because it's not as familiar to you. So go ahead over to that accounts defined tab and let's figure out which one makes the most sense, right? If I think about all of the different account names that I have defined, an amount owed to another party, goods are received but not yet paid for. That's exactly what happened, right? We received this landscaping equipment and these supplies, and we said, we will pay you in 10 days. So the account that we're going to use when we owe someone for these items that we've currently received is going to be account payable, okay? So now we have to ask ourselves for each individual account, what type is it? Where does it fit in the accounting equation? And is it increasing or decreasing? So landscaping equipment is something that we own and benefit from having. It's an asset. So that's going to go under the asset column. And because we just received this landscaping equipment, it's going to be a positive amount, 11,400. Supplies, also something that we own and can benefit from having, right? Because we can use these supplies to help us, run our business. It's an asset. And so it's also increasing. We received $2,280 worth of supplies. Okay. And now accounts payable. Again, the trigger that I mentioned in previous lessons is that when you see payable on the end of something, it always means that you owe another party something, right? So account payable means that we owe another party for this landscaping equipment and supplies that we just got. And when you owe someone, that's a liability, right? So it's going to go under the liability column. And do we owe more now or do we owe less now? We owe more now, because this landscaping equipment and supplies is something that we are going to have to pay for in 10 days. So the account payable liability is increasing as a result of this transaction on April 3rd. So we're going to take, again, the same thing that I did with common stock. I'm going to take the 11,400, I'm going to add it to the 2,280, and that gives me the total amount of my account payable, right? So if you're not given the amount, you can figure it out by just adding up the other two. So there we go, April 3rd. April 6th, the company completed landscaping services for a client and received $2,000 cash. So in this example, we are providing services to a customer and receiving cash. So we have to think to ourselves, what are the account names that make the most sense to use, right? Well, right off the bat, we know cash. That's going to be one of them. But then we have to think about what is the account that we use when we provide services to a client. And we did do this last week, but again, if it's not fresh in your mind, go ahead and use that accounts defined tab in the Excel spreadsheet. Let's see which one makes the most sense, right? So if you read through these definitions and you get down to when services are provided to customers and they can be specific, something like consulting or landscaping, we call that revenue. So what we want to do in our accounting equation is we want to identify cash as one of our account names and then revenue, but we're going to be specific and call it landscaping revenue, right? Because that's the specific type of revenue that we've earned by providing landscaping services to our customers. So now the next step, right? For each individual account, where does it fit in the equation? And is it increasing? Is it a positive amount or a negative amount? Cash is an asset. We know that we just received cash, so that's going to be a positive amount, $2,000. Landscaping revenue, again, if you're not as comfortable with these account names yet, let's go over to the accounts defined tab. Revenue is going to be one of the components of equity, right? As we break down equity into 4 different components, we can see that revenue is one of the columns that equity is broken down to. So revenue always has a positive impact on equity. So it's going to be a positive 2,000. And you'll remember that also, if you scroll down, here is the accounting equation that we broke down a few lectures ago, right? And every time we talk about this accounting equation and we break down equity, you can see here that we identify that both common stock and revenue have a positive impact on equity, and then expenses and dividends have a negative impact on equity. So just remember to use these resources as you're going through these kinds of examples on your own, because you can make sure that you sort of remember these kinds of things as you get used to using the accounting equation. Okay, April 9th, the company completed a landscaping project worth $7,600. So again, we're providing services to a customer, and the customer is going to pay us in 30 days. So because we just did the transaction on April 6th, right, where we completed services for a client, we know that one of the accounts that we're going to use here is going to be landscaping revenue. So landscaping revenue is one of the accounts that we're using, right? We know that landscaping revenue has its own column under the equity section. It's a component of equity, and it always increases equity. So we're going to see that as a positive 7,600, right? Just like we did on April 6th. But now the other piece of it is saying that we didn't get cash from that customer right away. That customer is going to pay us in 30 days. And again, we did one like this in the previous example, but you may not remember exactly which account name we're supposed to use. Let's use our resources, right? If we go over to the accounts to find and we start to read through each of those definitions, the second one down says an amount that is owed to the company from their customer, right? So that's what happened in this scenario. We provided services to our customer. They're going to pay us in 30 days. So the account name that we would use to describe that is account receivable. So as it says in account receivable, as it says in the accounts defined, account receivable is something that we own and we will benefit from having, right? Eventually that customer is going to give us $7,600. So because it's something that we own and benefit from having, it's an asset. And then we have to ask ourselves that final question: do we have more receivable now, or do we have less of a receivable now, right? Because this customer now owes us more money, that's going to be a positive 7,600 in our accounting equation. Okay, so there we go. We did the sort of the first half of April transactions, and in the next video, we will just continue on with the second half of the month's transactions.